This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Canada's oilfield drilling and services sector is already showing signs of slowing due to U.S. President Donald Trump's threatened tariffs, triggering fears that an expected industry rebound could stall if such levies go forward. Employment levels in the Canadian drilling sector collapsed between 2014 and 2020 due to sustained low oil prices and reduced production during the COVID-19 pandemic. Activity has improved since 2020, but Trump's threat to impose a 10% tariff on the 4 million barrels of oil per day of Canadian crude imported into the U.S. could upend that, industry representatives said. When volatility affects oil markets, oilfield service companies are often the first hit as their oil producer customers look to delay or defer spending.
Oil prices were little changed on Monday after registering a monthly loss for the first time since November, while investors await the outcome of efforts to end the Russia-Ukraine war and repercussions from U.S. tariffs. Brent crude rose 35 cents, or 0.48%, to $73.16 a barrel by 13:07 GMT, while U.S. West Texas Intermediate crude was up 33 cents, or 0.47%, at $70.09. Ukrainian President Volodymyr Zelensky said on Sunday that he believed he could salvage his relationship with U.S. President Donald Trump. However, he said talks needed to continue behind closed doors after the heated Oval Office clash that cut short Zelensky's visit to Washington, D.C. last week.
Moving on to the top news in the energy sector.
Russia's exports of ultra-low-sulphur diesel, ULSD, from the Baltic seaport of Primorsk in March are set to reach 1.8 million metric tons, two traders said on Monday. That would be a 6% decrease on a daily basis from the 1.73 million tons scheduled for February, because March is 3 days longer.
Iraq's Ministry of Oil said on Saturday it had invited global foreign companies operating under the Association of the Petroleum Industry of Kurdistan umbrella, along with firms contracted by the Kurdistan regional government, to a meeting in Baghdad on March 4. The talks are set to address issues related to existing contracts and seek agreements that align with international best practices for oilfield development while safeguarding national interests, the ministry said in a statement. The Kurdistan region's Ministry of Natural Resources is also expected to attend the discussions, which come amid ongoing efforts to streamline oil operations between Baghdad and Erbil. Next, we have the top news in metal markets. Copper prices rose on Monday as a weaker dollar and stronger industrial activity in China raised hopes of stronger demand, though gains were capped by potential tariffs on U.S. imports. Benchmark copper on the London Metal Exchange traded 0.3% higher at $9,387 a metric ton in official rings. A weaker U.S. currency makes dollar-priced metals cheaper for buyers with other currencies, potentially boosting demand. U.S. President Donald Trump is planning to add another 10% tariff on Chinese goods on Tuesday, effectively doubling duties imposed on February 4.
Iron ore futures fell for a sixth straight session on Monday amid rising trade tensions between the U.S. and top consumer China, outweighing upbeat Chinese manufacturing data. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 2.81% lower at 779 yuan and 50 fen, $106.91, a metric ton. Earlier in the session, prices hit 777 yuan and 50 fen, the lowest since January 14. The benchmark April iron ore on the Singapore Exchange shed 2.53% to $99.85 a ton.
We will now look at the top news in the agricultural sector.
China has American agricultural exports in its crosshairs as it prepares countermeasures against fresh U.S. import tariffs, China's state-backed Global Times reported, raising the stakes in an escalating trade war between the world's top two economies. U.S. President Donald Trump last week threatened China with the extra 10% duty set to take effect on Tuesday, resulting in a cumulative 20% tariff, and accused Beijing of not doing enough to halt the flow of fentanyl into America, which China said was tantamount to blackmail. China is studying and formulating relevant countermeasures in response to the US threat of imposing an additional 10% tariff on Chinese products under the pretext of fentanyl, Global Times reported on Monday, citing an anonymous source.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.